Hey everybody, Alan Bramson here again. Today we're going to talk about financial statements. If anybody finds that they might want extra assistance in terms of this information and think you might need help for your company, please feel free to call me. My company, Value Added Accounting Solutions, handle all bookkeeping and related analysis for the landscaping industry. Regardless of what accounting system you use, you will have three financial reports that will be created for your company. The P&L or profit and loss statement, sometimes referred to as the income statement, the balance sheet, and the statement of cash flows. Now, the owner is the one most impacted, of course, so understanding the financials are key. There are a slew of different problems that can be uncovered if you understand your financials and where to look. It can show you which areas are performing well and which aren't, areas that are getting worse in time, issues that are brewing and will get worse if not addressed. It will identify the product lines that are doing well or poorly, and then you can, once identified, can make decisions in your business how to address these issues. Let's take a look at the profit and loss statement. Now, the P&L shows you basically at a very high level, do you take in more money for the product or services that you offer than you pay out or commit to. Nothing more than that. So the profitability over at least the long run must be sufficient to yield you a profit and then provide you the appropriate return for the money you've put in the business. Now, I am showing this on an accrual basis, not from a cash basis. There will be a presentation shortly that will explain the difference. But at this point, it's important to know the revenue shown does not mean this is the amount that the company took in the month of March. It's the amount the company earned based on activities and services that were completed this month. Some of it may have been received in cash. None of it, all of it. It doesn't matter. The P&L has nothing to do with the timing of cash. Let's look at the balance sheet. Whereas the P&L was for a period of time, that was for the month of March, a balance sheet is as a specific point in time. So this balance sheet is as of the moment March 31st, 2023. It shows assets, liabilities, and equity. Now, assets are simply items that the company owns with the expectation that it will yield future benefits. It's broken up into current and long-term assets. Current assets are simply assets that are expected to yield benefit within the next 12 months. Liabilities, on the other hand, are amounts that are owed and will have to be settled up at some point in the future. Now, current liabilities are liabilities that need to be settled in the next 12 months. Lastly, you have equity, and equity is composed of two parts. There's the capital, the investment that the owner put in to start the company, plus any additional investments from the owner, and any dollars the owner took out of the company would reduce this amount. In addition to capital, retained earnings is simply the history to date amount of either gain or loss that the company has earned. Lastly, let's look at the third financial statement, the cash flow statement. Now, before we talked about the fact that the P&L showed what was earned, not what was collected. Now, the cash flow statement shows basically the missing piece of this equation. Regardless of what is owed us, obviously cash is critically important. And so the cash flow statement looks only at actual cash that comes in versus cash that goes out. Now, if you look at the schedule on the right, you can see that the statement is broken up into three sections. It looks at cash that comes in from regular operating type activities, sales, expenses, collecting accounts receivable, paying debt, that type of thing. The investing activities, which means if you have a special purchase of equipment, or maybe you're selling equipment, or if you have some type of investment income, that data is put here. Financing activities, these are for bank loans received or paid off. And if the owner is investing in the company as well, that would go here. Now, the cash movement summary at the bottom shows that netting everything, that the company spent $1,500 in cash overall, so that they started the month with $10,000 in cash and they end up the month with $8,500. Now, the important thing I think to look at here is take a look at the net income. You'll see both on the profit and loss page as well as on the net income item in operating activities that the company earned almost $21,000 in income. Yet it actually did not take in $21,000 worth of cash. It actually ended up with less cash. So this is what I was mentioning before. A complete disconnect can sometimes occur between cash and the P&L. You cannot assume that because you're profitable, that cash-wise, that you will also see the same increase in your cash balance. Now, if you take a look at the statement, you can see its usefulness. You can see almost immediately the reason why the company did not have $21,000 of positive cash flow is that it purchased some type of equipment, presumably a truck or some other equipment, for $26,000. Without that, it absolutely would have yielded a positive cash result. So the take-home message is this. The profit and loss shows the big picture, whether the company is just at a very high level, is making more than it is paying out for the particular service or product that it produces. The cash statement, the cash flow statement, shows a very different perspective, regardless of whether a company is profitable or unprofitable, specifically what is happening with cash. And lastly, the balance sheet shows your resources, the timing of when you expect to be able to access them, and the liabilities that you owe and when you need to pay them. All three financial statements are crucial. They give you different pieces of information. You need to look at everything. And with the combination of the information from all three, you should have a good feel for your financial status. Well, that's the presentation. Thank you so much for joining us. Once again, if we can help you in any way, please feel free to click the link below to set up a free game plan session with me. And it's a Zoom call and there's no obligation, so I'd love to hear from you. Well, thanks again, and we will talk next time. Bye-bye.